Welcome to the 2016 Life Insurance and Wealth Management Practice Update. Hi, I'm Ilan Lees. As part of my day job, I head up the marketing and strategy area at a reinsurer, where I spend a large portion of my day consulting to clients in the life space. I'm also the convener of the Life Insurance and Wealth Management Practice Committee, also known as the LIWMPC, which rolls off the tongue. So what does a committee do? With the fanciest acronym of any committee at the Institute, we have a very broad and interesting role. Our terms of reference cover everything from education to professional standards to public policy. But very simply, we are actuaries who have a passion for furthering the life insurance and wealth management side of the profession. We meet regularly and discuss these industry challenges, along with reporting back from the 6 subcommittees that are tasked with delivery of the practice's requirements. This has arguably been one of the most interesting times in recent history to be a life actuary. Where life insurance used to be lucky to make it into the papers, these days we seem to be on the front page, sometimes for all the wrong reasons. This year has seen headlines related to a review by ASIC and APRA of declined claims on the back of negative media coverage related to claims management practices, the LIF reforms related to changes to advisor remuneration and training, a parliamentary inquiry into the life insurance industry, the Productivity Commission review of the efficiency and competitiveness of insurance in super, some life advisors being banned due to conduct issues as a result of ASIC-initiated reviews, and insurer losses, particularly in the individual disability space. Equally though, there have been some really exciting developments, such as further mergers and acquisitions of Australian insurers, for example, Nippon buying MLC Life, Zurich buying Macquarie Life, and Sony Life buying a stake in Clearview. New entrants such as Q-Insure or Pacific Life Re, an expansion of insurers into new product lines. The expansion of wellness programs and pilots around health and fitness. The development of the Financial Services Council's Code of Practice, and likely further development of a superannuation version over coming years. And the normalising of group insurance profitability. In terms of governance and regulation, there are probably 2 things worth calling out. There have been 2 information notes, the first related to life insurance assumptions and the second around setting of disability income assumptions. We've also seen a review of PS 200, which we shared with APRA, and endorsement by the committee of removal of PG 199.01. In terms of appointments of note, Liz Baker moved to EY, David Rush moved to KPMG, Matt Noyce moved to Swiss Re, and Trang Duncanson to Deloitte, although these are obviously only a few of the names through the year. During 2016, the LIWMPC worked with its subcommittees, the Institute, APRA, and other practice committees on a number of professional standards, practice guidelines, information notes, submissions, and surveys. We also engaged in sometimes fantastic debates about some of the industry activity and the role that as actuaries we should and shouldn't be playing. Of note were working with Council through feedback on APRA's review on the role of the appointed actuary, supporting the Risk Margins Task Force's Stress Margins Review and a review of the IAIS Risk-Based Global Insurance Capital Standard Note. We did a review of the course notes and textbooks for the 2A and 2B course. There was delivery of a high-quality newsletter on a monthly basis to our members. Saw delivery of regular high-quality insight sessions on life insurance to encourage debate and share learnings. We spent time ensuring the committee devoted significant time to discussion of strategic issues at each meeting. And lastly, our engagement with industry stakeholders across regulators, government, the Institute, our peers on other practice committees, and even media to support our profession. In terms of our focus for 2017, as part of a review of our strategy, the committee will spend time in December reviewing our plans for next year. This is likely to continue to include identifying new and emerging technical and practice needs of members. So the regulatory and landscape changes will play a big part in defining these needs. We'll be looking to identify risk exposures for the profession in life insurance and wealth management. We'll continue to maintain and develop the education materials. The new 2A and 2B course notes are expected to be rolled out. We'll look to identify continued professional development needs of members and developing CPD programs and opportunities. Maintaining the level and quality of our insight sessions will be a core focus. we'll be focusing on identifying potential issues for research and development. So areas such as the retirement income space, or impact of IFRS 4, or changes to global capital or accounting standards are likely to be included. We'll be looking to review and develop relevant professional standards and practice guidelines, this being arguably the core component of our committee. We'll be involved in preparing public policy submissions on technical issues affecting life insurance and wealth management, and on matters of broader public interest. A focus here on the future of life insurance, big data, or claims management are likely to dominate our agenda. We'll also continue to communicate on a regular basis with members, for example via the newsletters and Actuary's digital articles. Again, we continue to make this a priority, along with being braver to share open views on even the more controversial topics. We'll aim to develop links with other actuarial bodies and relevant professional and industry bodies. We're very keen to increase engagement, in particular with the regulators, but also other practice committees, given many stakeholders don't differentiate between actuaries of different practice areas. And lastly, we'll be focusing on the Course 5A and 5B improvements in 2017. More broadly, we're keen to pick up and debate key industry issues and try and raise our voice a bit more in the public debate around some of the life insurance challenges. This will no doubt be a difficult task, but we're keen to put ourselves out there to show leadership and transparency and constructively having opinions on the changes all around us. In terms of useful information for CPD, there are a number of Actuaries Institute releases that are relevant from a life perspective. These include Council's response to the APRA review of the role of the appointed actuary, the Institute's submission to the Productivity Commission Super Review. There's a green paper on the impact of big data, many information notes, for example on target capital, the framework for setting life insurance risk margins for regulatory capital. There's a stress margin survey, PS200, a note on analysing disability income and setting assumptions, along with another note on setting life insurance assumptions. There is a submission on the Productivity Commission data access. And don't forget the Life Insights sessions, which are free for members and also available online. You can also reference all of our newsletters and the Financial Services Forum earlier in the year with all the presentations that were delivered there. Lastly, I'd like to say thank you to the members of the Life Insurance and Wealth Management Practice Committee. A very smart and passionate bunch of actuaries who volunteer their time to further the life insurance side of the profession. We'd also, as a team, like to make particular mention of Bazana Hinton, who's made a very significant and effective contribution as previous convener of the Life Practice Committee for the past few years, and sadly left us this year to pursue a more international focus. I picked up her role as convener with some very big shoes to fill. To end off, there's never been a more exciting time to be a life actuary. So if you have any suggestions for the committee, such as topics for insight sessions, or you just want to get involved in the Institute's activities, please do get in touch. We would really love to have you involved. Thank you.